It begins quietly, almost too quietly to notice. A young couple sits in their car outside a modest suburban home. The paint is chipped, the lawn uneven, yet to them, it represents everything: their first step into ownership, stability, and wealth accumulation promised by a system that rewards discipline, patience, and hard work. They've done everything right: stable jobs, good credit, months of searching, weeks of negotiation. Then comes the call, their offer rejected, not because it was too low, but because someone else, something else, offered more. Cash, instantly, no inspection, no negotiation, acquisition. The beer is capital, orchestrated by BlackRock, a firm whose trillions ripple through global economies like invisible shockwaves. For decades, buying a home was human: saving money, securing a mortgage, negotiating face-to-face. Inflation, often misunderstood, amplified homeownership as a wealth-building tool. When central banks expand the money supply, each unit of currency loses purchasing power. Homes, however, retain value. Mortgages remain fixed, while the property appreciates. Ordinary homeowners benefit, repaying loans in cheaper dollars. Work hard, buy, hold, let time and inflation do the rest. But systems evolve. What happens when homes become financial instruments managed by institutions with near-infinite capital? Efficiency, speed, scale. Suddenly, the dream shifts from owning to renting, from building equity to funding someone else's portfolio. The 2008 financial crisis reshaped the rules. Millions lost homes. Foreclosures created distressed assets sold in bulk to investors. Blackstone's invitation homes emerged, standardizing thousands of properties into rental empires. For institutions, volatility is opportunity. For families, devastation. Capital does not fear dips in price, it calculates advantage. From survival strategy in 2008, this evolved into a structural play. Ownership is no longer about individuals, but portfolios, metrics, and algorithms that never sleep. BlackRock is more than a beer. Its system, Aladdin, monitors market trends, neighborhood sales, and interest rates, predicting price movements and allocating trillions in milliseconds. Algorithms evaluate thousands of properties simultaneously, recommending purchases that maximize long-term returns while minimizing risk. Ordinary buyers are no longer competitors, they are obstacles to efficiency. Speed, scale, and predictive analytics dominate. Neighborhoods are acquired in bulk, rents standardized, scarcity artificially engineered. Families compete against machines that quantify human behavior, monetizing hope, desperation, and emotion. Globally, the pattern repeats. Canada, the UK, parts of Europe, corporate landlords consolidate housing, rents rise, and ownership for average citizens shrinks. Low interest rates, quantitative easing, and flexible regulation create fertile ground for capital domination. What was once personal, emotional investment is now cold, calculable business. Neighborhoods become portfolios, streets grids of cash flow. Human agency diminishes. Psychologically, families feel frustration, resignation, subtle despair, sensing the system is no longer level. That homeownership dreams slip beyond reach. Supply and demand mechanics are simple in theory. When demand rises but supply is static, prices increase. But institutional capital changes the game. Homes are no longer dwellings, they are commodities, tools for wealth extraction. Bulk acquisitions manipulate supply, push prices higher, lock out first-time buyers. Imagine a pond. A pebble creates ripples. A boulder reshapes the shore. One family versus a corporation acquiring thousands. The psychological impact is profound. Hope becomes anxiety, desire becomes futility. Participation feels meaningless. The American dream appears just out of reach. obscured by algorithms and trillions of dollars in institutional capital. Step back and consider scale. In metropolitan areas, corporations now own 10 to 20% of single-family homes. Each acquisition shifts local market dynamics. Fewer homes for private buyers elevate prices naturally. Bulk purchases standardize rents, implement predictive maintenance, optimize occupancy. Communities transform. Human networks subordinate to economic calculations. Neighborhoods once defined by people become portfolios defined by cash flow. The human element is secondary. Subtle, relentless, invisible. Ownership erodes. Dependency rises. Psychologically, the effect is staggering. Families sense they cannot compete with speed, scale, or data. Every attempt to secure a home is swimming upstream against a current they cannot measure. Hope diminishes. Dreams are monetized for someone else's profit. Homes, once personal sanctuaries, become instruments of extraction. And yet, most people do not perceive the shift. Streets are still intact, neighborhoods still function, but beneath, the foundation moves. Globally, institutional models repeat wherever infrastructure allows. Predictive analytics, low-interest environments, and regulatory gaps favor capital concentration. Housing, once a personal path to wealth, becomes a global system of concentration. Institutions benefit from predictable returns, inflation-adjusted assets, and demographic trends. Ownership becomes a privilege, access controlled by those managing portfolios, not communities. Yet, systems are human-made and can be countered. Regulatory interventions can limit bulk purchases, incentivize first-time buyers, and protect community equity. Cooperatives, land trusts, and financial literacy empower citizens. Ownership can be reframed, not just accumulation, but stability, equity, intergenerational wealth. Awareness transforms fear into strategy. The story of BlackRock, algorithms, and institutional housing is not merely finance. It is power, psychology, and societal priority. Homes stand, streets remain, yet the rules have shifted. Ownership is more than legal title. It is control, choice, and the ability to shape one's own destiny. The future of housing is unwritten, but with strategy and awareness, it can be reclaimed. The first step begins with seeing the machine for what it is. Subscribe, or stay in the dark. Subscribe, stay ahead.